Hello traders and welcome to another video review. Today is Tuesday, December 7th of 2021. Let's start with Forex calendar. The key event overnight was RBA interest rate decision and the RBA monetary policy statement. The Reserve Bank of Australia hold the interest rate at the level of 0.10% as expected. So we will definitely take a look on the Australian dollar during the technical analysis part. Moreover, we already got the data from the industrial production in Germany. As you can see, it is increasing from minus 0.5% to 2.8%, which means it beats the expectations of 1.1%. And the Halifax House Price Index, houses in England are going up 1% in November. What do we have today during the London session? ZEW economic sentiment, current situation, and the survey is scheduled for release at noon. The same data are scheduled for release at noon from the Eurozone and from the Germany. Moreover, there is a GDP revised and employment change from the Eurozone that will be released at the same time. The GDP for the third quarter is expected to be released at the level of 2.2%, just at the quarter before. During the New York session, we got a trade balance and non-farm productivity and labor cost data from the US scheduled for release 3:30. Then some data from Canada in form of a trade balance and IV purchasing managers index. As you can see, purchasing index is being scheduled at 5 p.m. It's supposed to beat the last reading of 59.3 with the number of 60.2 points. So kind of a busy day today, but not that much. So let's start with the Australian dollar and then we will see where this will get us. Australian dollar, as you can see, has bounced from the key technical support at 6,992 pips. This is the technical support from the lows of 2020. This is the low of the 2nd of the November 2020. So we got a bounce, and where are we going with that bounce? The nearest technical resistance is 7,107 pips, so it looks like we are going there, but the key one is 7,171, so only if we break above this level, then of course we can consider this as a nice bounce higher. Any violation of 6,992 pips will lead us towards the next level, like 6,926 and even 6,778. But for now, the bounce is needed because the market conditions are extremely oversold. The last reading was 20 points on the RSI. Now we are pointing to the to the north. The sentiment is kind of improving, but still bears are in charge of this pair. We should expect lower prices to come very soon. How much we bounced already? 1%, 148, which is kind of very close to 126. The biggest correction to the upside, the biggest bounce during this down move from the 29th of the October. So Australian dollar going down. New Zealand dollar, what is going on here? As you can see, the same situation. We broke below this low of the 6,857, below the trend line, short-term trend line, and now we kind of are bouncing from the 6,753. Nevertheless, as you can see, this is the key technical support. It has been violated because the low of this sell-off is at 6,738, so it's like a 12 pips lower. Nevertheless, if we take a look here on this chart, we can see clearly that well, the key technical levels, 6,783, 6,753 are now violated, both of them, and it looks like we will be going lower on the New Zealand dollar, because there is nothing here until 6,721, and then of course that kind of a pattern here, that was just before the rally in 2020. So please keep an eye on the current situation of the New Zealand dollar, because only a sustained breakout above maybe 6,880 would give us some kind of a relief, a rally higher, but it doesn't look like something like that is being performed, despite the fact that we are trading in extremely oversold market conditions. So that might be some just corrective bounce here, and that might be just a corrective bounce here. So please pay attention, especially for the cycle that is being built here towards 6,880. If we won't even get there, then of course the downtrend will be continued for quite some time for now. So that's the Australian dollar, that's the New Zealand dollar. I think we should take a look at the euro dollar before the Germany and the Eurozone data. So what do we have here is the euro dollar, and the euro dollar, it doesn't do much from last week. As you can see, volatility is very low. We don't want to go up, we don't want to go down. The euro dollar is doing nothing, which is always no good, because that means bears or bulls are planning something, they are into something. The key technical resistance 1.1422 is this one here, and only if we break above that level, we can of course then test 1.1501, which is the game changer. This is the level that changes the outlook from bearish to bullish. So far, local resistance 1.1373, nothing is going on here. Local support 1.1237, and the lows of 24th of the November 1.1255. Not much is going on here. It all looks like an inside bars. So in that situation, I can say that trend continuation is more probable than the trend reversal. So please keep an eye on 1.1167 and 1.1153. That was the euro dollar. Let's now take a look at Bitcoin. Of course, what is Bitcoin doing? Pretty nice bounce on a Bitcoin. We have very long down shadow on this pin bar during the sell-off, but as you can see, we closed in the middle of the range. Since then, Bitcoin is trying to bounce higher. Of course, that would be our technical resistance, so let's put it in red. This technical resistance, well, maybe we should lift it a little bit. There you go, 53,228 is the key short-term technical resistance. Moreover, the market keeps trading, let's put it this way, keeps trading below this short-term trend line, the orange trend line, and if we violate this trend line, there will be very nice reversal pattern, and maybe the next target would be around 59,528, basically $60,000. So please keep an eye on Bitcoin as well, because volatility is a little bit subdued, but it doesn't matter as long as we have green candles here, and we are bouncing from the extremely oversold market conditions. So far, bears are in charge of the Bitcoin, but bulls are trying step by step after the giant sell-off during the weekend. They are trying to bounce a little bit higher towards short-term trend line, and of course the technical resistance at 53,228, and if they do, there are chances for another wave to the upside. That's everything for me for today. Thank you very much for watching this analysis. Hope you guys see you next time, which means tomorrow. So take care and bye bye.